The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 28th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here, but even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. And of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a bit of a mixed bag out there. You've got the Dow that's up 245 points, about 0.5%, 41 points or 0.7 for the S&P, 214 points, 1% for the NASDAQ 100. Russell's up 5. Transports are down 66. Semis are off 14. You've got gold that's up. Gold is where'd gold go? It's up about $25, trading out at $27.63. Silver 38 cents the upside, 30.79 is the print. Light sweet crude is up 10 cents, printed at 73.28. Natural gas is down 10 pennies, printed at 3.15. You've got the 30-year Treasury that is down 20 ticks out there. So we just take a look at this screen here. The Dow Jones is going to form a TD9 count top today. It'll complete that pattern tomorrow. Momentarily, you're going to be looking at the upper left-hand screen here that's got the daily time frame. Today will become bar number 8. In fact, I'll just simply expand this out. What you'll see here with regard to the Dow cash indice that we're taking a look at, its price target is a 45,059.94 level. That's the TD9 count breakdown area. We're also approaching a Rhodes Momentum Indicator top, and so price is going to have to close above 45,071.29 in order to negate that Rhodes Momentum Indicator top. But we're approaching an area where we should see some type of at least short-term top, and with price pulling back to test support. Now, right now, there's a new daily profile. Well, I take that back. There's no daily profile in this. The price target to the downside would be its oscillator and change line right around 43,906. So that's for the Dow. Now, the pattern does not complete until tomorrow, so we can see higher highs out there with this pattern. The transports formed a TD9 count top, I believe it was yesterday. Let's take a quick peek here. They completed that pattern. So what you're watching for here, if the trannies were to close above yesterday's high, that's going to be the key level of resistance, and that is at 16,901.07. Then that's going to suggest a strong momentum move to the upside with price targeting 17,636. Otherwise, what price should do is pull back towards the 16,466 level out there. If we take a look at the industrial sector, well, that already completed a TD9 count top yesterday. If we take a look at support, it also formed a new profile, and it's got support at 137.78. Both the oscillator and change line and the bottom of its profile are lining up right there. Such a strong level of support. Resistance up at the 141.90 level. We take a look at the XLF. Likely to confirm a TD9 count top today. Today will become bar number 9. Pure prices taking on its TD9 count breakdown resistance level. In a moment, we'll see exactly what that is. That's up at the 51.49 level. Now, price is moving into its Rhodes Momentum Indicator top swing point. That's a swing point from November 27. That swing point did volume of 31 million shares. Look, we've only been trading for a little over an hour and a half or so. We're 13 million shares. So you got 13 million shares going into 31. Quite frankly, the XLF is moving into that swing point with volume. So this would suggest to Stevie that if price closes today above 51.21, even though today will be bar number 9, it'll be the bar following bar number 9 that would make the high, because price should then at least go target the high of that swing point from November 27th, 51.62, by closing above 51.21, simply because we have the volume inside of the instrument as we speak right now. What else do we have out here to take a look at? You've got the diamonds. So in the case of the diamonds, I'll put that screen up. Also, there you'll see any new profiles that may have formed here. Those would be areas. And see, on the Dow Diamonds, the interesting thing about this, these profiles formed below price yesterday. That is a very bullish message. Profiles also formed above the prior profile. That's also a bullish trend message. But again, the Dow Diamonds are targeting their TD9 count breakdown resistance level. That's going to be at the price point of 451.48. The actual swing high, we trading into it? We are. It's going to be the candle from December 4th. 3.7 million shares traded that day. So far, we've done 450,000 shares. So 458. It seems like it's about lighter volume. At this stage of the game, seems like it's a little bit lighter volume out there. Now, the Dow Diamonds, their target to the downside would be 438.90. Again, that top may not complete pattern-wise until tomorrow. We've got the euro. The euro may form a TD9 count top today. Let's go take a look at it. The only way that's going to form a TD9 count top is if price is able to close above 1.0408. 1.0408. If price closes above that, you get a TD9 count top. That would suggest a pullback to at least the 103 level, the daily oscillator and change line. That would then go ahead and put some strength inside of the U.S. dollar index. Do I have anything else out here for us to take a quick peek at? Nothing that I see here. I was untimely this morning. My apology for that. But why don't we go take a look at that 9-panel market update chart, just simply to give you a good overview. Let's see if Stevie can find it. Here we go. So the upper left-hand side, we haven't discussed the ES Mini. We will do that. ES Mini yesterday finding support towards the bottom of its new profile. Bottom of that new profile, 59.36. We are traded above, and yesterday we closed back above its green oscillator and change line. That's a bullish signal, and that suggests that the ES Mini wants to go target profile resistance. That's up at 61.62 out there. This profile formed above the prior profile. From a profile standpoint, that's a bullish signal. In the case of the NQ, it found support at the bottom of its profile. It's now trading into its sell zone. There was no new profile out here. The sell zone for the NQ is between 21,415 and 21,535 out there. If price is able to close above 21,535, it also has a resistance barrier at 21,601-ish. That's its daily oscillator and change line. The Dow Equity Future contract also going to form a TD9 count top today. We'll complete that pattern tomorrow. 45,619 is still an upward price target. If we take a look at high-grade copper, it keeps tinkering with the bottom of that daily profile. The bottom of that profile, which is where we're trading right now, is printing out at 4.2579. If we take a look at Goldilocks, gold formed a new profile yesterday. Support at 27.18, resistance up at 27.72. There's an A to B equals CD pattern to the upside. That ought to take us to its TD9 count breakdown level. That's up at the 28.26 area. In the case of silver, consolidating with inside its daily profile. Lights Recruit looks like it wants to go target the 68.94 level. You've got an A to B equals CD pattern inside of natural gas. That needs a bullish reversal candle to confirm a bottom. Steve Rhodes with TFNN. We come back from this break. We're going to take a look at the Hang Seng, NVIDIA, Otis, at Netflix, and Apple. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're taking a look at the Hang Seng. This is for GTE. And so the Hang Seng, kind of an interesting set of patterns out here. First, it did go ahead, GTE, and complete a TD9 count top today. So what should take place is price should pull back, and likely the price target to the downside about 19,804. Now, if it's able to hold that area, tests and rejects that level, then the A to B equals CD pattern that also went ahead and formed today will likely take fold. That's going to get you back to those highs that came in at that last TD9 count top, that back on December the 10th out there. Also, if price is able to close above today's high, that's at 2337.46, this pattern would be negated, and the A to B equals CD pattern, the upside, would take hold. It's a possibility. The reason why I say it's a possibility is what price has done so far this week. It's trading just above its green oscillator and change line. Now, it has tested this level since November 15th and has not been able to break through it. Now, you got the TD9 count top, so by week's end, it may be right back below it at 2162. But that's just with a trade above it right now, there's that potential that this TD9 count pattern could fail. If it doesn't fail, you're looking at a retracement to 19,804. And then potentially that A to B equals CD pattern completing to the upside. So that's the Hang Seng. That was for GTE. We got a couple of requests to take a look at NVIDIA. So one from Tom G this morning, another from Ron R inside the Tiger's Den. That's not exactly where I was going to go for those charts because the questions were intraday. So let's pull up our multi-time frame set of charts out there. And if we take a look at first the monthly time frame, what do we know? What we know about the monthly time frame is that there is a Rhodes momentum indicator top in place. Right now, price is trading below its oscillator unchanged line. In fact, if we open up the chart, you're going to see that NVIDIA has stayed above the oscillator unchanged line. Now, let me get my cursor out here. Ever since, takes us back quite a ways. It's been trading above that level, closing above that level since February of 2023. Been a couple of tests of that level. We still may be seeing a test. The month doesn't end until the end of the week out there. But the number to be watching there is 123.63. A close below that, as you can see, would be kind of a change in trend signal to us. And that would suggest that NVIDIA instead would be targeting 112.73, maybe even 84.70. But right now we have to wait to let the month play out in order to properly interpret the monthly chart. On a weekly time frame, we don't have to let that play out. We've got a TD9 count top, a Rhodes Momentum Indicator top, price trading into a what could be support, which is its breakout level at 114.86. It didn't get down to there. It got down to the center of its slightly bullish structured profile, 117.97. So the weekly says I might be at support. And if that's the case, then you'd love to see the daily rally from here and get that weekly chart to close back above that green oscillator and change line and maintain kind of its bullish look to it. On a daily time frame, there's an A to B equals CD pattern that formed yesterday. We're beyond the 1-to-1 level, and if we were to get a bullish reversal candle at 11:21, it shows up as a bullish hammer candle. That would be a Gartley buy pattern. But I don't know if it's going to look like this at 4 p.m. It just looked like this at 11:21 a.m. If I look at a 195-minute time frame chart, it also has an A to B equals CD pattern. Now this bar here is going to go ahead and complete at 12:45. So if at 12:45 that's a bullish hammer candle, then Tom G, then Ron R, you're going to have a buy signal for that time frame that would suggest a rally up towards the 133 level. On a 130-minute time frame chart, let me see here. Open this up. Yeah, you're going to form bar number 8 of a TD9 count, but it will not likely form a TD9 count. Price would have to close below in order for that to happen. Price would have to close below yesterday's low out there. So likely not going to get a TD9 count pattern inside the 130-minute time frame chart. But you do have a Rhodes Momentum Indicator bottom on the 65, the same on the 130, the same on the 15-minute chart. So for those of you looking for intraday charts here, here's what you're up against. You're up against potential resistance levels. The first one is being tackled as we speak right now. It's on the 15-minute time frame chart, and that's at the top of its profile, which is at 121.01. I'd feel more comfortable knowing that price was able to close above 122.20, that the 15-minute chart would suggest that the rally is going to continue out there. On a 30-minute time frame chart, you're already back inside the profile. Its price target is going to be 124.93, and then above that 128.40. On a 65-minute time frame chart, your price target's about 125.75-ish. Let's say between 125.75 and 128.52. So those are the price targets to the upside. It can do more than that, but those are the resistance levels that you're dealing with from an intraday standpoint, which is really what both of you, I believe, were looking for. Now you're looking for more of a swing trade out there. So that's John. So you'd really be looking for, I would say, you'd really be looking for a daily bottom signal out there. And for that, you need a bullish reversal candle. So I hope that helps you guys out with regard to what NVIDIA is doing, as well as just NVIDIA. That's all we were talking about. Let's go on to our next request. This coming in from John in Milwaukee, long-term holder since 2020 of Otis. OTIS is the ticker symbol. I don't know if those are the elevator people or not. But his question is really more from a longer-term standpoint. Where's the buy from a longer-term standpoint? Well, I'd first say the buy is at 91.92. That's the bottom of its monthly profile. This has a Rhodes Momentum Indicator top. And price pulled all the way back to test that 91.82 level, found support last month, found support this month. In essence, long-term, that's the buy point out there. Where's the sell point? The sell point for you could be a close below 91.82. Not suggesting that you do that, but if you give that up, then we're headed to lower price. And on a long-term basis, a monthly chart out there, that could be a signal point back to 55.75. We're not going to go there just yet, but right now 91.82 is a key level to watch. On the daily time frame, the key level to watch is where we're at right now. This is where this was a Gartley buy pattern that formed out here. A to B equals CD pattern. It was confirmed with this bullish engulfing candle 2 weeks ago, week of January 17th. Price closed above the top of its profile last week. That's beautiful. What you really need to see this week is a close above that oscillator and change line, 97.20. This is where the C point of an A to B equals CD pattern to the downside could form on the weekly time frame out there. I don't have anything to suggest that it's going to turn into an A to B equals CD point, but if you're looking for where a rally could end on a weekly basis, it most certainly would be that level. And so far, that's what's held. It's going to matter where price is trading on Friday, not necessarily Tuesday at 11:25 in the morning. But the reason why I say that could be the C point of an A to B equals C dependence because of the daily time frame. And the daily time frame chart will go ahead and confirm a TD9 count top today as long as price is able to close above, which it should be able to do, 95.39. Now that's going to suggest that price continues to retrace. Retrace to where? Well, that oscillator and change line is really the next level of support on the daily time frame. So this is suggesting that Otis wants to pull back towards 94.13, still well above your 91.82 area out there. When the price pulls back, tests and rejects that level, it would still be about profiles out there, and then would suggest that it wants to resume its move higher. If it starts getting into the 93.32 level in lieu of some other new profile forming for the daily time frame, that would then suggest we pull back towards that 90.48, 90.83, and that's where you start to jeopardize the 91.82 level. But let's do it like this, John. You've got a nice hammer bottom candle out here on the trading day of January 8th, and that low is 90.37. Let's not make it 91.82. Let's make it 90.37 would be the sell point for your potential sell point for your longer term position. Steve Rhodes with TFNN. Look great.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at the charts here for Netflix. This is for Nicholas. Nicholas, so Netflix, first it's in an A to B equals CD pattern to the upside. And I'm using a conservative A to B equals CD to the upside, and I'll show that to you momentarily. But right now, and that was confirmed when price gapped up on the trading day of January 22nd. The volume behind that move was 14 million shares. It was taken out a swing point that had 3 million shares or something like that. So you've got a confirmed A to B equals CD. As I said, this is a small one. It gets up to about the 1083 level. Before I open up the daily chart and we start taking a look at it, let's take a quick peek at the monthly and the weekly. Monthly chart is in full out bullish mode out here. You're in bar number 6 of a TD9 count pattern. This thing wants to head higher. If we take a look at the weekly time frame chart, last week price negated a TD9 count top that had formed on December 13th. There was 14 million shares that traded that week. That was negated with 36 million shares. So now this has a Rhodes momentum indicator signal. That just means it needs a bearish reversal candle to confirm a top. But otherwise, prices trade above all profile resistance. Oscillator change line resistance wants to head higher. Okay, that's what's going on there. Now let's go take a look at the daily, but let's just narrow this down just a bit, make it a little bit easier for us to see exactly what's going on. Now, Nicholas is in a call position out here. And the issue that you may have is you have a new profile that formed yesterday. So price may just consolidate with inside this range. And the range is 931.56 at support. And resistance is up at 1018.61 out there. So you've got a consolidation that's taking place. Longer term, I mean, if you were a holder of the stock, well, it's going to go, I would not tell you to sell or anything, because you've got that confirmed A to B equals CD pattern to the upside. You've got a weekly negated TD9 count. Everything here is signaling that it wants higher price out there. That's Netflix. So I hope that helps out, Nicholas, with regard to what it's doing. As always, thanks for your request. Jambalaya inside the Tiger's Den would like to take a look at Apple. So Apple right now is trading out at 239.33. It has a profile change in trend signal today. I don't have a bottom pattern per se inside of Apple. That is a bottom pattern. When you close above the top of a profile, you do it for 2 consecutive sessions. Today would be session number 2. That is a profile change in trend. Where's the next level of resistance for Apple? Well, the daily time frame resistance is up at 253.50 is what it looks like to Stevie. That's a TD9 count breakdown level. On a weekly time frame, price is getting or attempting to get back inside its profile. In order to do that, on Friday it needs to close above 236.94, but it's trading above it right now. The daily doesn't have any profile resistance or any other resistance level that I can see. So it appears to Stevie that what Apple's communicating to you and I, Jambalaya, is that price wants to go target that 244.66 area. That is the center of its weekly profile. And finally, when we take a look at the monthly time frame chart, the monthly time frame chart will go ahead and confirm a TD9 count top this month, as long as price is able to close above, and right now it's trading above it, 233 even Steven. Now, we also have where price is pulled back and tested, and so far rejected that green oscillator change line. So even if it does that, it's got more of a neutral type signal than it does a bearish signal. So neutral to bearish is what we would say. But right now, the daily wants to rally. The weekly wants to, looks like it wants to rally further. The monthly, no problem there at this stage. So I'd say the 244-ish areas where Apple is likely to trade to. So hope that helps you out. Steve Rhodes, Tesla level, please. So let's go take a look at Tesla, TSLA. See what we have going on here. That is from Rahul, I believe. Okay. I must have missed your other message. My apology for that. But let's go see what Tesla is doing. And levels, I believe you're talking about profile levels. So first, with regard to the first profile level of support for Tesla, we're looking at 378.38. That's from the daily time frame. We can see how that oscillator and change line is acted as resistance on any rallies. So to the upside, you would certainly be watching that. At present time, printing out at 421 or thereabouts. If we look at the weekly time frame chart, the next level of support, because price is trading below its green oscillator and change line and within its profile, would be down to 345. You're not worried about that until you see how price reacts at the 378 level. The other area that you're really watching out here for levels is going to give you two more, Rahul. One is going to be the swing point from January 2nd. That low is 373.04. If price were to close below that, that will trigger an A to B equals C pattern to the downside. The next level of support would be at 348.20, but that A to B equals CD pattern would take you below 348.20. But that would also be another support area. So for levels inside of Apple, you're watching 378.38 on the daily. Then you'd be watching 373.04, and then finally 348.20 out there. And then when we take a look at those areas, then the weeklies would be the ones that would come into play. On a monthly time frame, there's no topping signal at all. Looks like it wants to head higher. Sell the D point on the weekly time frame with price inside those profiles. So right now, the most key level is going to be at 378.30. So I hope that helps you out. You've been short since 435. You've got the numbers to be paying attention to. You know what you'd love to see. So it's trading into the swing point right here from January 2nd. Now, I don't know how you really come up with what the accurate volume might be on that day. But right now, it's 109 million shares. And so far, in 2 hours of trading, Tesla's done 21 million shares. You're moving into that swing point with lighter volume. Today's not any kind of holiday, so you're really moving into a swing point with lighter volume. It would really suggest that 378.38 level is likely to hold. What you're watching for today, though, is if price were to close above that swing high, the swing high from January 2nd. So that next another level to watch, 392.73, because if you close above it, then what you've got is a test and rejection of a swing point on lighter volume. And you remember Tom's expression out there, if you can't bust them to the downside, price will try to bust them to the upside. So hope that helps you out. See what gives. Duncan Stevens. I'm melting. Can we please take a look at Avgo? Absolutely. So let's get Broadcom on our screen out here, AVGO. See what we have here. It's going to take just a moment to populate. System behaving pretty well, but that's because I've got the e-signal system turned off out here. So we take a look at Avgo. It looks more likely than not that this wants to do a gap fill out here. What I mean by that is this thing gapped up on the trading day of December the 13th. Big volume behind that move. There was 121 million shares behind that move. Yesterday, it came down with 90 million shares. So lighter volume, but you're inside that gap. So really, you've got the level, I'd say, the level of 184.87 could easily be a price target. With price trading below the bottom of its weekly profile, that's a bullish structured profile. If we close below 214.14 on Friday, it adds the idea of filling that gap out there. And that's for Duncan Steve was looking for that. And if we look at the monthly time frame chart, we don't have any kind of a top, but support would be between 179.21 and 186.42 out there. So, yeah, that's what I see when we take a look at Avgo out there. It looks more likely that it wants to fill that gap than anything else. I see you've got another request for KLAC. We've got requests for PAGS, for OKLO. So Steve will get those charts set up, and we'll be back in just a few.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's take a look at the charts here for KLAC. This is for Duncan Steve inside the Tiger's Den. So this has a daily TD9 count top. That went ahead and formed on January 16th. And then yesterday was the first close below the bottom of its daily profile. Today's going to be a second close. We have a profile change in trend. The next level of support where price is going to go target is its breakout area. The daily time frame's got that at 640.32. So where is KLAC headed to? It looks like 640.32. Let's see if the weekly chart confirms that. Weekly chart shows that we are trading back inside its profile, and we're trading below its oscillator and change line. If on Friday, price range below that, currently printed at 696 and change, the so-called 697, if you will, 698. If price closes below that at week's end, it adds the idea of 640.32. On a monthly time frame chart, the profile level of support is at 623.34. So moving back to 640.32 doesn't get in the way of that pattern out there. So KLAC looks like it wants lower price with 640.32 being that price target. Watch 697, 698 when it comes to the week. When it comes to weekend. Brent in Martinez, California wants to take a look at ticker symbol PAGS. PAGS trading right now at 724. Brent is the one that brought this to our attention quite a while ago. Was looking for a bottom, and all of a sudden it showed up on Stevie's scans in the early December timeframe, middle of December timeframe. And look at the beautiful TD9 count bottom that formed on December 19th on the daily timeframe, weekly TD9 count that formed December 20th, and we've got a monthly TD9 count bottom. So PAGS is working the nines out there. Brent's long, Stevie is long, subscribers are long, and this is a nice trade setup right now. The next level of resistance that we've got out here, Brent, is going to be at 746. So you've got volume, and that's the TD9 count breakdown area. I'm not saying that's where price is going to stop. We don't have any kind of a topping signal. If anything, you've got an A to B equals CD pattern to the upside. The swing point out here that we would use would be the swing high from January 15th, 3.7 million shares. When this was passed yesterday, was 8 million shares. So your A to B equals CD to the upside. And I'm just going to use it really should look like this. I'll draw on the correct one. There's your A to B point out here. And I'll let you simply move that over to the C point level. That's going to be the lowest low after that B point forms. And that's going to give us a 1-to-1. It actually takes us really right up into that 746 level. Now, there you'd be looking for some type of bearish reversal candle to confirm a Gartley sell pattern, to sell the D point pattern. But short of that, price should continue to rally. We can also see that prices along the left side of the C to D level. So that suggests this does more than a 1-to-1 A to B equals CD pattern to the upside. If price is able to take out 746, then that's going to signal that the next run should take us to 801. 801 is the top of its daily profile. And above that, you'll be looking to move towards 855. The resistance level on the monthly time frame is at the 842 area out there. So PAGS looks good. Brent, I want to thank you for bringing this to our attention when you were looking for a bottom, and I loved it when it showed up on my scan with all three of them with TD9 counts out there. So a beautiful trade, and hope you have a terrific day. LB is looking at the long-term holder of Okla, but wants to know what's going on from a short-term standpoint. So I really should have put that on a different set of charts out there now that I say that. So we're going to do that. We'll take just a moment here, let these charts populate, because this is the only way I'm going to be able to give you a decent OKLO a short-term set of signals out there. So if you give me just a moment, we'll let these stock charts here populate. And then we've got we've got a 15-minute, a 30, 65, 130 to be able to take a look at. So what's going on a 15-minute basis? I see a Rhodes Momentum Indicator bottom. I see a TD9 count top with price pulling back and testing support, which is between 29.48 and 29.96. So from a very short-term standpoint, you're watching those levels out there. If that area holds, well, that could be an entry point if that's what you're looking for. Just realize you've got a TD9 count top that price has to take out and negate in order to, so that's going to be resistance point, which is going to be 33.88. I've got a TD9 count bottom pattern on the 30-minute time frame chart. Price got above profile, back below it. So this profile area is really a significant area of resistance, even though we closed above it, but you got right back below it, that 32.42 group of sellers out there. On a 65-minute time frame, I don't have anything out here other than profile support and resistance. Support for you is down at the 30.50 level, resistance 34.82. You're traded inside a bullish structured profile on the 130-minute time frame chart. So now let's get back to the dailies. So the daily has a Rhodes Momentum Indicator top, big gap to the downside yesterday. Price closed below its green oscillator change line. It's trading below that right now. If these bottoming, these intraday, these short-term bottoming patterns fail, and the failure would really be a close below 29.20, what that's going to tell us is that what Okla wants to do, OKLO wants to do, Lee, is move back to 25.15. And 25.15 is the bottom of its daily profile. And you're trading below the center right now. Looks like a fairly balanced profile out there, but it looks to me more like, because this had this little counter trend rally on the 15-minute, really not all the time frame charts, but ran into that TD9 count, the 15-minute basis, that maybe this is really communicating to you and I that it wants to pull back towards the 25.15 level, the bottom of that daily profile. So, Lee, I hope that helps you out. As always, thank you for your request. I believe I have gotten through all the requests out there. If I overlook something inside the Tiger's Den, or if you've got something new, feel free to go ahead and post that. In the meantime, let's go take a look and surf around the market, see what's going on. Let's take a look at the intraday charts here for the ES Mini, see what we see. And I can tell you one thing that we see out here, and that is from the 5-hour and the 4-hour time frame chart. The oscillator and change line is proving to be a key level of resistance. That's at about 60.84. Let's make it 60.85, 60.86. If price were to close above that, that's going to be our next signal of a further rally. And that further rally, when you can watch the 120-minute time frame chart, it's flirting with trying to form an A to B equals CD pattern to the upside. Now, this bar here completes at 12 noon, so another 11 minutes from now. So the first price point to be watching is going to be 60.73. We're at 60.70 right now. Now, even if price doesn't close above 60.73 at 12 noon, that doesn't mean it won't go ahead and form that A to B equals CD pattern. Price is traded above its oscillator and change line. It is traded above profile resistance, which is at 60.58. Watch 60.73. If price closes above that, you're then going to get a confirmed A to B equals CD pattern to the upside. That would bring 61.54 into play out there. And then I say, well, if you're going to get to 61.54, you might as well go tag the top of that new profile out there, and that would be at 61.62. SOXS. I believe that would be the short. Is that a one-time ETF out there? That's the request that's in. I'll go ahead and put that up. I always like to make sure we're looking at the 1X ETF, which I know would be SOXX from the long side, but I'll assume that SOXS is the short side one time out there. So let's get this up on our screen. Oh, we'll try to get it up on our screen. Okay. It didn't work. Don't like when the keyboard gives me a problem. Nope. There we go. SOXS. We're going to take a look at this when we get back from this break out there. Steve Rhodes with TFNN. We'll also take a look at Oracle. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We are taking a look at SOXS. It is the 3X bear position for the semiconductors out there. We'll take a look at this. I'll flip over to the SOX. itself. Here you can see that price running into a potential resistance level, descending trend line. It's traded into a swing point from back on the trading day of December 20th, 48 million shares there so far today. You've done 35. So price moving in that swing point with volume. That suggests that it should make a run for that high, the high being 24.71. But just pay attention to that trend line. That is an area of potential resistance out there. If we take a look at the 1X of this, we've got the SOX, which is testing a swing point from November 27. 3 million shares there. Came down yesterday with 16 million shares. So far today, another 3 million shares. So that level is likely to get tested. That's a hammer candle. You're going to want to watch that low, 208.89. If price tests and rejects that level, even with volume, just says be careful. Maybe we get back down there, but just realize that that hammer candle from November 27th would have held out there. That's the best that I've got for you, I think, with regard to the semis out there, is to watch that hammer candle from November 27th. Let's go take a quick peek at Oracle, I believe it was. Someone inside the den wanted Oracle. If we take a look at Oracle, what do we have here? Well, we've got price on a daily time frame trading above profile resistance. That was at 176.26, so that's a bullish signal. We can see that price is trading inside a bullish structured weekly profile. And as long as price can stay above 160.60, you may be looking at a run towards 178.65. That's its weekly oscillator and change line. On a monthly time frame, what you like about Oracle is it has both a monthly TD9 count. No, it has a Rhodes Momentum Indicator top. And price this month has pulled back and tested really two levels of support. The first is the top of its profile, which formed below price, and that's bullish, 155.98. The second is the oscillator and change on 159.27. So it does appear that Oracle wants to rally further out there. And that is the end of the show. Hey, how about that voice? Maybe by tomorrow, we're back to close to normal. That would be a beautiful thing. Folks, have a terrific Tuesday. Stay tuned for all the great programming. I'll be looking forward to seeing you tomorrow, Wednesday, 11 a.m. sharp, and I'll be there, I promise. Take care, folks.